Robinhood stock has been getting absolutely destroyed lately, especially over like the past month or so. And in today's video, I'm going to explain exactly why that is, why it's a very valid concern. These are issues that you should definitely be aware of if you're invested in Robinhood or you're thinking about buying it. And of course, as always, I'll let you know what I plan to do myself with this stock. Remember, this is actually a stock that I do own myself. I'm actually down close to 20% on my position. So I got to make the decision here. Do I want to buy more as the stock is crashing here and lower my cost basis and invest in this company long term? Or do I just kind of hold here because there's too many concerns? Or do I even consider selling out of my position because it's just too much to handle? So we're going to cover all of that in today's video. Hope you guys like it. Hit the like button if you do. I wish I could tell you that you could also hit the dislike button, but something that I don't agree with, by the way. There should definitely be a dislike button, but it is what it is. Our overlords tell us that we cannot have dislike buttons anymore. Anyway, rant over. Let's get into the video. Let's get started. What's up, everyone? My name is Ale. Welcome back to my world of stocks. Thank you for joining me. Let's go ahead and take a closer look at Robinhood. Let's pull up that stock chart and let's take a look at what's going on here exactly. Okay, so taking a look at the stock, we can see that they have now crashed by almost 30% in just this past month alone. That is crazy. And when you zoom out to a couple more months, the crash is almost as high as 70% from their highs after IPOing earlier this year, a gigantic crash. Now, for me personally, I was down almost 20% on my position, but spoiler alert, I did decide to go ahead and buy some more shares here today to lower my cost basis. And I was actually able to catch those shares at under $27 a share, which I did think was a pretty good price. I think long term I'll be happy with it, but we'll see. May continue to crash. But anyway, as it stands, Robinhood is about 1 to 2% of my portfolio, and I'd really like it to be closer to around 3 to 4%, so I could still double down again easily before it's all said and done. And if the stock keeps crashing like it is, that's probably what I'll end up doing. I'll probably end up buying even heavier. Now, speaking of the crash, though, we should take a look now at everything going on. And there's really a few reasons why the stock has been crashing. First of all, the initial surge after the IPO was more so driven by retail traders from Reddit, especially, and so on, that just kind of pumped up the stock before later fleeing back out of it, which sent the stock crashing back down to reality. But ever since then, the stock has crashed by even more, and eventually it fell to an even lower price than their IPO, which is where they sit today, right at the very bottom. Now, that more recent crashing was initially kicked off by their latest earnings report that failed to meet analyst expectations, but it was later dragged even further down because of a data breach, as well as a growing fear that governments will ban the sale of investors' data, which is how Robinhood makes the majority of their money. But we'll talk more about those two last things closer to the end of the video. First, I want to touch on the earnings report because that was what is, in my opinion, kind of the biggest issue going on right now with the company in terms of everyone kind of panicking about their growth actually slowing down, which in all honesty, I do completely agree that their growth is slowing. Now, that looking at that earnings report, it was for the third quarter, and it came out about a month ago, where Robinhood announced that their sales grew by 35% year over year to about $365 million, which is obviously very nice growth for practically any company out there. However, the concern is that it not only missed analyst estimates by over $60 million, but it was also a heavy decline of over $100 million from the prior quarter. So yes, an increase year over year, but a decline quarter over quarter, which was mostly due to a gigantic surge in cryptocurrency trading that later fizzled out as people started selling out of coins like Doge and other ones, which sent Robinhood sales crashing back down to where they would normally be. In fact, cryptocurrency trading only brought in about $50 million this quarter versus over 230 million the quarter before, mostly because of that huge popularity in coins like Dogecoin, for example. And that impact is expected to continue. In fact, Robinhood also guided for $1.8 billion for the full year, which would give them revenue growth of around 88%. But Wall Street wanted to see revenue growth of 111% because they thought the crypto surge would have continued, which it looks like it probably won't. On top of that, several other of Robinhood's metrics also saw a decline from the prior quarter because of all of this, and that included monthly active users, funded accounts, assets under custody, and average revenue per user. Now, the disappointing results were enough to convince analysts to downgrade the stock and issue sell recommendations, which sent the stock crashing even more over the following weeks. But Robinhood themselves insists that these type of extraordinary events where a giant swarm of new users flood into the platform should not really be seen as a negative, because even though it does kind of hurt the metrics and they have to correct back down over the coming quarters, and it does make it impossible to accurately predict sales on a quarter to quarter basis, at the end of the day, it is still a net positive to gain a bunch of new users. And Robinhood fully intends to continue investing in not just, features that these new users are really into, like cryptocurrency, like, for example, they are with a new crypto wallet that already has over 1 million people signed up on the waitlist. And I actually just signed up myself, and it was like close to almost 2 million. But they also added 24/7 call support, which makes them the first crypto platform to offer that. And personally, I really think that the biggest benefit here is what they said about adding new users, even if it does have to correct back down a bit. I mean, looking at their total accounts, this quarter was a slight drop, and the next quarter might also be a slight drop. But even with those drops, this quarter was still a gain of almost double the amount of users that they saw a year ago. So my only point is that yes, quarter over quarter, they are facing some struggles, and there is going to be a period here of stagnation until things kind of level out and they can return to some of that higher growth of the past, assuming that the company performs well. Uh, but my point is that the stock has reflected all of this, all of these issues, these struggles, the unrealistic, really high expectations that they were not able to match. Their growth was not able to match the expectations that we put on them, and therefore the stock has come crashing down as it should. It is a very well-deserved crash, and now the price is getting more attractive. So that's my point here. Now, I say that the price is getting more attractive. That's not to say that it's not still expensive from a valuation standpoint. So we'll take a closer look at that. But I still feel that as a speculative, kind of risky long-term stock, I still think Robinhood is one of the better stocks out there, especially at today's prices as it continues to crash. But we'll talk a little bit more about this valuation here. So looking at it here, now there's no doubt that revenue growth is expected to be much lower this year, dropping from almost 250% growth last year to just less than 90% this year. But again, I would argue that 2020 was an unbelievable year given the stock market crash, as well as the huge rise in crypto, and also with meme stocks and the rise of Reddit trading and all of those different things. Plus, even at 88% growth this year, that's still higher than what they saw in 2019. So by no means do I think that the growth is horrible. It's actually still pretty good. But when looking at the valuation side, Yahoo Finance estimates that their revenue for next year will be around 2.2 billion, which I personally think is a very lowball figure, which I think is a good thing, because that means that Robinhood will have an easier time beating those analyst estimates. But with a 2.2 as forward sales and a current market cap of almost $24 billion, that would put their forward price to sales ratio at right around 11. Now, that's definitely high. I can't really sugarcoat that, because you always want a PS ratio that is close, as close to 1 as possible. But to be fair, most high growth spec stocks tend to trade right around these levels. And whenever Robinhood has a huge growth year of over 100% growth, that ratio would basically get cut by more than half. So it can actually come down fairly quickly if they are able to bring in more growth. But that's just something that only really time will tell. Again, I'm a believer long term. I think the world of investing is definitely not going anywhere. I think it's only going to get larger over time. I really think that we're in a period here where more people have access to investing than ever before, especially younger people. And that is such a key demographic because as they grow older, they'll invest more and more money. And if you can continue to attract younger investors, then it's kind of a never ending cycle of growth. You'll just kind of have a snowballing effect. And Robinhood does one of the best jobs out there at attracting that key demographic, attracting younger investors who can really grow up with Robinhood, with the platform, and just create all of this growth for them. Again, Robinhood has done a good job of attracting them by offering very ambitious kind of features and disruptive features, things that legacy players have been very complacent about and just haven't been offering themselves until Robinhood came around and just kind of disrupted everything. So long term, I just really think Robinhood has a very good shot at being one of the market leaders here in a market that, again, I think is only going to get larger over time. Now, having said that, there are a couple other concerns that I mentioned before. One was a data breach. Personally, I don't pay too much attention to data breaches. This one didn't look like it was something too serious to the point where I think people are just gonna like never use Robinhood again. Robinhood does have some issues with that, which is one of the reasons why I actually invest also with E-Trade, because I kind of trust E-Trade a little bit more. But I use both, and honestly, Robinhood is the one that I use the most. And data breaches is just something that is gonna happen on occasion. You hope that it doesn't, and I think Robinhood will do a better job going forward of ramping up their security, and they'll learn from it and things like that. But that's not something that I look at a stock and I say, okay, there was a data breach, I got to sell out of the stock and never buy into them again, unless it's something absolutely massive, which this doesn't, in my opinion, look like it really is. The other concern, though, is actually one of the biggest concerns when investing in Robinhood, and it really makes Robinhood a very risky stock to own. And that is how they make their money, which is by essentially selling your trading data. And by doing that, they're able to offer commission-free trading, which is one of the revolutionary things that made Robinhood so popular and made them able to disrupt, this whole market. The problem, though, is that a lot of governments are thinking about banning these methods. And if they do that, that would be a big blow to Robinhood, because that is the primary way that they make their money. Now, personally, I think it's actually a very good trade-off. Like, I don't have any issue with them selling our trading data. I know it's a controversial thing. I know in a perfect world, they wouldn't do that. But the exchange that we get in return is that we get commission-free trading, and I'm willing to make that exchange. I mean, that's fine. Use my trading data. You give me commission-free trading. I'll take that exchange. And my hope is that enough people love that exchange that they'll kind of push back on governments who want to ban those methods, because if you ban those methods, Robinhood will very likely have to start charging fees, and then you can kiss goodbye any kind of commission-free trading, which I think would be a very bad thing for all of us retail investors and everything else. So my hope is that they don't ban that stuff, but that's something that is very speculative and completely out of our control. Like, we're never gonna be able to accurately predict whether that will happen or not. As it stands, the United States is kind of thinking about it. I know Europe has been thinking about it. We'll have to just wait and see what happens with that. But that is why Robinhood is a riskier stock to own. And that is why I personally don't want it to be more than just a few percentage points of my portfolio, so that if in even the worst kind of case scenario for Robinhood stock, if it was to just get absolutely destroyed and just, I don't know, go bankrupt and they went to zero, it would not hurt my portfolio so much to where it would devastate me. If it's only around 3%, maybe 4% of my portfolio, it's not the end of the world. It obviously, I definitely would not want that to happen, and it would hurt, but it wouldn't be, so devastating to where I would be destroyed by it. So that is my take on it. I would actually love to own a lot more Robinhood stock, but because of that, just for that simple reason alone, that governments are thinking about banning their primary source of revenue, which would make them have to fundamentally change their whole business model and have to start charging fees, which I think would, I think a lot of people would stop using Robinhood if they had to actually pay fees. So that is the reason why I can't go so much heavier on Robinhood. I have to kind of limit it. If it wasn't for that, I would actually own more of Robinhood. But again, as a speculative, risky stock, I mean, we could have, Chinese stocks. There's a bunch of different risky stocks out there. Personally, I think Robinhood is still one of the better choices, and this is a stock that I'll continue to own myself, again with limited exposure, so that I do limit my risk a little bit and I don't lose too much sleep on it. Anyway, those are my thoughts, everyone. Let me know what you think about this. Let me know what you're doing. Are you like me? Are you buying as the stock crashes here? Again, I'm buying in kind of small amounts as it crashes, but are you doing the same, or are you selling out if it's a stock you already own? Or if you do not own it, are you just completely staying away from it? Which I completely understand all of those different strategies. Like if you want to sell this stock, it's just too risky. I completely understand that. Or if you just want to stay away from it, completely understand that too. But for me personally, I just think that it is one of the better speculative stocks out there. And, I like to gamble on some spec stocks once in a while. So I don't have any issue betting, placing a bet on Robinhood. So anyway, those are my thoughts. Let me know what you guys think down below. And I will catch you in the next video. Hope you're all doing well. Take care. Bye-bye.